Very, very excited to welcome our dear guest, Mr. Tarek Amyuni. Good morning, Tarek.
Good morning. How are you, Alex?
I am very good. It's a slightly cloudy day in Côte d'Azur, which is very unusual, but the sun is bright and shining in our hearts and minds. And I'm very excited that you are with us. And so you have been the head of the financial markets and investments program at SKEMA Business School for more than 20 years now. And prior to that, you were a trader at Merrill Lynch in the US. And for about a decade, if I remember, would you like to tell us a little bit about what were you doing back then, how your days looked like?
Those are the old times. Things have changed since. Hello, everybody. Good to have you with us. I guess some of you guys have been some of my students. I recognize some names here. Yeah, the experience at Merrill was quite enriching, stressful but fun. I was young, ambitious, and it was a good times in the markets. I mean, the 90s, the 80s, and the late 80s, early 90s. Things have changed. They've become more computerized, as you all know. We didn't have the internet at that time. Everything was done by fax. So when I see courses on Python and VBA Python or whatever, all those languages, I try to participate and get excited about it. But it's a totally different new trading world today than it used to be. With a lot of algorithm, as you know, Alex. I know you code for someone we both know at remind me the company.
Brevin Howard.
Brevin Howard, sorry, yeah. So I think Python is really the key language to know in market finance today. Whatever job you're going to, let it be structuring, trading, risk. That language is going to be with us for a while, and it's really nice to have you, Alex, sharing your knowledge with us and the students that are with us. And I look forward to listening to you.
Yeah, and I'm looking forward to listen to you as well, because you will help me. So I'm really glad that we have a good bunch of people who were able to join us, and then we will share the recording with those who couldn't join us with the technical glitch, but at least we have a nice crowd. I can see a lot of students from our campuses around. I can see people from the Paris campus, from the Lille campus, from the Sofia campus. That's really nice. And so I'd like to share a little bit of background of how this idea came up of doing these webinars, because we are actually doing a course starting next semester, an introduction to Python for finance, which we already did last year. But this year, I would like to do it in a different way. And the way I would like to do this course is to make it more applied to finance. So instead of like trying to learn the alphabet and like saying, oh, these are the variables, these are the functions, these are the loops, and this is how you do it, I'd like to start by some concrete examples from financial markets, from classical textbooks like the Hull, and then try to solve them through Python. And this is how I would have liked to learn Python 10 years ago when I learned it, and this is how I would have liked to do the course in the first place this year, which I didn't, because it was just my first year teaching, so I am learning from experience, and so I had the idea that we could share this class with people, with people who are like with the students from last year, who will be able to benefit from the new course that I'm doing for next year. And so without further ado, maybe we can start working out some example, Tarek. What do you say?
Sure. I know you've picked up 2 good examples from the whole book, which is really the book that each student should have, each finance student should have. We even find this book on trading floors as reference, so it's definitely good examples here. So here we have the first example.
Yes.
Yeah, we have the first example of a trader, of an FX trader who entered into short forward contract to sell is a small trader, 100,000 British pound. That's a small trader, but it's always good to begin small. Don't ever forget that you have to limit your losses, cut your losses, and let your profit run. Okay, so when you start trading, even for fun, always start with small sizes. Okay, small sizes. Learn with small sizes and then increase them as you go. Anyway, so a trader is short 100,000 pounds against US dollar at 127. That's 127 US dollar per pound. Some students are always confused about FX. Make sure you know your FX price levels. Okay, this is 127 US dollar per pound. How much does the investor gain or the trader gain or lose if the exchange rate goes to 126 and then 129? So if it goes 26, the first thing you should ask yourself is, okay, I'm short British pound at 127. That means I need $1.27 to buy pounds. And now the dollar, all you need is $126 to buy pounds, which means the dollar has strengthened. You need less dollars to buy a pound. So first of all, you know there's a gain here. Okay, there's a gain of 0.01 points. Okay, basically. So 100,000 British pound, you have $0.01 difference. So you make $1,000 profits. Now let's see how this can be coded with Alex.
Yes, let's look at that. And first of all, I'd like to set the vision first, because of course this is a very simple exercise. I'm pretty sure that the majority of people can solve it very quickly. But the point where I want to bring our public, our students, paper, very easy to do, but where what we're trying to do to prepare our students at SKEMA Business School is to prepare them for what they're going to do on the trading floors if they are accepted for internships. And in this case, they're not going to deal with one or two trades that they will have to compute on paper, but instead they will be dealing with tens of trades, like very, very large table looking like this. They will be required to compute PnLs. They will be required to do reports of the PnL for each trade and for the cumulative PnL over time. So let's start with solving one simple exercise, which we just mentioned with Tarek, and let's see how we are going to solve this in Python in a more general way. And so Tarek, you were telling us how we solve this. So let's see on paper first. So you say that let's start with this guy. Let's start with case A. So Tarek, you say that so this is this. First of all, we need to take the final price.
Yeah, 127. 127 minus. First of all, the student has to understand if you have a profit or loss. So before getting into numbers and formula, okay, you shorted pounds. So you shorted pounds, 100,000 pounds at 127. That's 126. So if you're short pounds, that means you're long dollar. Okay, the dollar did go up. All you needed before was $127 for a pound. Now you need $126 for a pound. So the dollar strengthened. So you have a profit. A profit of how much? Well, 127 minus 126, as Alex is writing, times 100,000, and that will make $1,000 profits.
Times 100,000. That's exactly right. There's just one thing that I want.
We're losing you sometimes, Alex.
Losing me.
Yeah, you're back now. You're back.
Okay. I'm glad I'm back. So let's try to generalize a little bit, because now we're saying that we do 1.27 minus 1.26 because it's a short position.
Right.
And but the thing is, we want to generalize this as much as we can.
We're losing you again.
Let me change. I will change my connection. I will change my connection. We are testing our problem-solving abilities.
I see that Nicolas is with us, one of my students, and Sophia.
There we go. Can you hear me well now?
Yep.
There we go. So let's say that we want to generalize this a little bit further. And let's set a position variable. Let's say that position is equal to 1 if we are long and -1 if we are short. So here we calculate it in this way because we know that we are short. But what if we had both long and short position? Well, the way I would express this, let's try to think about it, is, so let's take the final price minus initial price. So of course, and then times the contract size. So in this case, the final price is 1.26 minus 1.27 times 100K. And of course, this doesn't work in this case because if I do 1.26 minus 1.27, I get minus 1.05, 1.01, sorry, 0.01. And that gives me a loss, which is inaccurate because we are short. And that's where we will add the position variable here. So that if we are short, like we are, then this will become a -1, and then the counts, the numbers are right. What do you say, Tarek?
Yeah, that's good to me.
So let's try to go and code it. Let's try to go and code it. There we go. So let's take also the exercise. There we go. Okay, so what did we say? We said that the information that we need, could you recap the information that we need to take into account? We said we had the position, right? So the position is -1. Then we have the size, which is 100,000. And then there's the initial price.
Just for those who can't see very well because it's small, you can zoom on the screen. I mean, I'm sure you know this, but you can zoom on the screen to see. No, not you. The attendees can zoom on the screen and have a bigger size there, just in case.
Thanks, Tarek. So we said that the initial price was 1.27, and then the final price was 1.26. And so we said that we calculate the PnL just as position times final price minus initial price in some parentheses times the size. And we print our solution, PnL equal to PnL. So let's see if everything works out right. So we have $1,000 positive PnL. Does it look right, Mr. Amyuni?
Yes. Yes, it does look right. Yeah.
It does look right. And we said that the other example was if the final price is 1.29, then we should have a profit, a loss of
2,000.
Of 2,000. So all of this is good, but this is, a little bit too easy. Let's see how we can generalize this if we have another problem. See, now I'm taking another problem. So a trader is entering a short cotton future contract. The future price is 75 cents per pound. The contract is for the delivery of 50,000 pounds. So how much the trader gain or lose if the cotton price at the end of the contract is 73 cents. So here we have the exact same problem. So let's see if we can find a more general solution.
And let's note that those prices are very updated, Alexander. I see you follow the right market prices, which is always appreciable. So for students, it's always important that examples use real prices so that they have an idea of what all those examples and all those commodities trade at. So thanks for updating those prices.
Yeah, that's thanks to you, Mr. Amyuni. I still remember very vividly my first days at the MSc of Financial Markets and Investment at SKEMA Business School back then, where you were insisting a lot on us being updated about the current market prices, just to show our interviewers that we were up to date.
Absolutely.
And I can really, it was hard because sometimes you couldn't do an exercise from your quizzes if you didn't know the price from like the gold price of the day, and that was a very good habit that you instilled in me and in the generations of students that you trained. So thank you so much for that. And let's try to generalize our problem. So the point of programming is that we want to avoid repeating things without reason. We want to avoid repeating things without reason. So let's try to capitalize on our efforts and make an effort once, and then just use the code that we've written multiple times. So here we saw how to compute the PnL of a position. Let's try to define a function to compute the PnL of any position. So the variables that we need to take into account are the position, we need the final price, we need the initial price, and we need the size. There we go. We need the size. And so, as we said just earlier, we compute the PnL as the position times the price difference. Price difference. There we go. Times the size. And just to make it look a little bit nicer, we will round it to the first 2 decimals. Anyway, when it comes to dollars, we don't need more than 2 decimals. And we will also print it. Let's print it very nicely. There we go. And return our result. Return PnL. So now let's do this. Let's solve exercise 1.2, the one with the GBP. So we said that the compute PnL. So the position was a short position, so it's a -1. then the size, we said it was 100,000. Then the initial price was 127, and the final price was 126. So let's see, when we evaluate our code, there's something that is not right. So let's see what is it that we coded wrong. Anyone in the comments? Go ahead.
The position. So the last price. So you define the the position. This is 2 minus 1. Final price should be 1.27, 1.26, and the size is at the end. Is the 10,000, I think.
All right. So it's the position. It's the position of the arguments. Very well. Very good catch. There we go. And now actually our PnL looks right. So, and the good thing about this is that we don't have to code the solution, like to do the exercise many times. We can use the exact same function to do the very same thing, but we just change the parameters that we input in our function. So in the first case, the final price was 126. In the second case, it's 129. And so we have a PnL, a positive PnL of $2,000. And then let's solve the other exercise, which was exercise 1.3 from the Hull, which most of us probably are very familiar with. So now instead of making all the calculations again, we will just use the exact same function, but we will only change the parameters. So in the case of this exercise, the position is always short. The initial price was 0.75. The final price was 0.732. And the size of the contract was 50,000. 50,000. What do you say, Mr. Amyuni? Is it all right?
Looks like a good trade to me.
It looks like a good trade. Let's see. So are we making money? No, we're not making money. We're losing.
You're short of 75, cover 73. You should be making money, no?
No, we are actually.
But you inverted the 0.75. It should be final price. Final price is 0.732, isn't it?
Oh, that's why.
Yeah,
you are a better trader than I am. That's why you have a seafront house and I don't yet.
There you go.
There we go. Now the numbers look great. Okay. And now we do the exact same thing, but with the other case. And this again is pretty simple. So like this is very basic stuff. And yeah, and here we have a loss of $650. So the thing is, Tarek, you've seen the financial markets change a lot over time. Like you were a trader for a decade at a very different time from now. How have you seen the markets change over the years?
It depends which markets, but the markets are much faster. Obviously, the information is available within a quarter of a second for everybody. Much more liquidity. Algos are bringing a lot of liquidities as well. So the market, I would say, is more efficient and is you might think it's harder to trade, but I would think it's easier to trade than at our time, despite the added liquidity. We had less liquidity before. It made it hard. The spreads were extremely important at that time. We had big spreads between bid and ask. The spreads today are so narrow that that trading has become, I think, a bit easier than before. My opinion.
And what about the needs of your alumni? Because over the years you've built an incredible network of alumni. Like you've been teaching for 20 years and
25.
cohorts
25.
25 years. So you have seen countless cohorts of students who have become alumni, who have become people who recruit your students. So what can you tell our students from SKEMA and from everywhere? What can you tell them about what is it that your alumni look for in young candidates who want to break into this career?
They look for the understanding and mastering of derivatives for sure, and this we do a lot in our program, but always accompanied by more and more programming. So we started VBA about 10 years ago. We were the first one to start VBA. Then we had some C# that was more for engineers, so we dropped C#, and we focused on Python. And we understand R is becoming less and less used, but Python is gaining momentum, and it's definitely. So to answer your question, the master of derivatives, structured products, and pricing, of course, and Python is the key to getting recruited. But once again, the recruiters are not only looking for techniques; they're always looking for good minds as well. Okay, so you might be a super geek who can program like a madman, but you have to have a personality that can adapt to trading floors, to stress, and to a special atmosphere. So technique, yes, but I would add that you need to have this mindset of someone who can handle pressure and at the same time being pleasant with your colleagues.
Right. And I don't have the ambition to teach people to develop this mindset just in the tiny space of this webinar, because that takes probably
a lifetime.
That probably takes a lifetime. But I think we can at least do something for them in terms of teaching some technical skills. And so what I wanted to do now, since the market and technology has evolved a lot, of course, we are not, in real life, we're not talking about computing the PnL for just or one or two trades, but most probably there will be matrices with tens and thousands and hundreds and thousands of trades. So what we can do is let me see if I can share this for those who want to try the exercises on their own machine. Let me write something in the chat. I will write you the little bit of code that you can use in case you want to repeat the exercise with me. So there's I don't really like how it's displaying. Just give me a moment so that I can share with you the code that you can directly execute without having to do any weird manipulation. There we go. There it is. So please let me know in the chat if you can see the bit of code that I just sent you in the chat.
Yeah, I see it.
You can see it. So anyone can copy paste this code. It links to my GitHub. So I created a mock data set so that people can try their hand at this exercise live. So let's see. Let's take this guy. There we go. Okay, so we have our data frame. We have our data frame of trades. So here we have 10 in real life. People will have probably hundreds or thousands of trades that they will have to reconcile. So we have long and short positions, different sizes, different underlyings. Of course, each underlying has its own size. And we have an initial price and a final price. And the question is, how do I find a general way to create, for example, a report for risk or compliance or for anyone who requires it, to see how much we made or lost over some time period. And so let's do that. So this compute PnL function was helpful to deal with one case at a time. But now we are dealing with a lot more crates potentially. So our argument will be a data frame of crates, and we will need to know the position. So let's do it in the other way. Let's say that we want to return a data frame of trades, and let's try to define what our data frame of trades will look like. It will be a data frame where we will add a PnL column, PnL, and so this, as we said, the PnL will be computed as the position times the price difference times the size, and we already have this information. And by the way, the way I am writing this code is it's a method that's called wishful thinking. So we write the code that will not work immediately, but we write the code as we wish we wanted it to be, and then we go backward and define the variables that we need to define. So for example, the price diff variable is not defined, so we need to define it. And in the meanwhile, if you want to try your hand and post your solution in the comments, you're very welcome to do that. You can post it in the chat. So price difference, we said that the price difference is equal to the final price minus the initial price. And we're given that in our trades DF, in our trades data frame. So let's compute that. Trades DF, final price minus trades DF. Initial price. There we go. So now we have the trades DF, and we still need the position. And the position will not only be the direction, but also the size. So we need to multiply the position times the number of contracts, trades DF, number and contracts. Does the logic look right, Tarek? Any fallacies?
Not that I see. Position trade, try difference trade. No, looks.
Let's see. You know, you never know if your code is right until you try it.
Yeah.
So let's try and execute it. So let's see that our solution is equal to compute PnL of trades DF And let's try and print our solution. All right, so now we have the exact same data frame that we had before. Let's print an empty line so that it's a little bit clearer. There we go. So here we have the exact same data frame. In the second case, it's not printing the columns in the middle, but we can see that in the first case, we were printing the raw data frame, and in the second case, we're printing the data frame with the PnL. So let's try and see if the numbers are right with any example. So let's take, for example, the gold trade from the 13th of May 2024. So 13th of May of 2024. Let's see, I'm taking my calculator here. So we say that we need to take the final price, which is 2,571.49 minus 2,315.84, and that gives us a 255.65, and we need to multiply that by the multiplier, the contract size, which is 100. And how many contracts did we have? 20 contracts. 20 contracts, and that gives me 20 contracts short, and that gives me 511,300.
That's a bad trade.
That's a bad trade. It could cost someone's house, but at least the numbers are right. So it seems like our function is correct, and so now that we have that, so one thing that one would want to do is to have one thing that interns might be asked is to create a report. So to create a report, maybe you will need to write your report to CSV. So let's call this trades with PnL.csv. So now if I execute my code, this is not working because this is not named trade, but trades df. And there we go. And what happened here is that, let's go and look. We created this CSV file, which is definitely something that interns might be asked. And then maybe we will not be asked only to do like a CSV report, but also to do a plot. So since we want to do a plot, let's import the library that we need to use for that. That's pyplot as DLT. So since we're learning a little bit over time, I will do only one of the plots that I was planning to do, and I will share the code with everyone to do the second one. So let's try to calculate the cumulative PnL. Calculate the cumulative PnL. Trades df. So first of all, we need to compute the cumulative PnL. And the way we would do that is to take the trades. We take the PnL one by one. And we compute the cumulative sum. And now that we have that, we can plot the PnL. So let's create a figure with an axis. And let's plot. So let's plot. On the x-axis, there will be the index, which is the dates. And then on the y-axis, there will be the cumulative PnL. Rates df, the cumulative PnL. And let's see how it looks. All right, this is how it looks. So it does the job, but it doesn't look very pretty. Like there's this, one cannot understand what happens with the dates. It's not very nice. So if I were the one who asks for this report, I wouldn't be very fond of it. So let's try to make it a little bit nicer. So for example, one might wonder, what is this plot about? So we can start by setting a title. Cumulative PnL over time. So at least now we have a title. It looks a little bit nicer, but still the axes are not named. So let's say that on the x-axis, the label is the date. Now at least we know that it's the date, and we also want to show that on the y-axis, we're talking about the PnL, cumulative PnL in millions. So cumulative PnL in millions USD. There we go. So it looks a little bit better, but Tarek, do you see anything that bothers you in this plot?
Let's see the bottom. Maybe the horizontal axis, which is like, I don't know, maybe it's my screen, but I see like numbers on top of each other. Or am I wrong?
Yes, it doesn't look really good. You're right. So we need to find a way to show this in a nicer way. So let's try and find a way. Let's plot the x-axis with a rotation of 45 degrees. Let's see if it gets any better. Okay. Oh,
Much better.
This looks better.
Yeah.
And so the other thing that I'd like to see is when is it that we are underwater, and when is it that we're making money? So first of all, just to make our plot a little bit more readable, maybe we can add a grid. Let's add a grid. Let's add a grid. Let's see how it looks like with a grid. All right, so now it's easier to see where we are. And let's plot something that shows us when is it that we are underwater. So there's this very nice function which I really like, which is called AX H span. And let's set the color. Let's set the color. Let's set the color in light blue.
Light blue's good. Light blue's good look like the PnL, isn't it? Anyway, go ahead.
Let's try. Oh, so this is not working because we need to put a y min and a y max, so minimum value. So y min. So the minimum will be the minimum value of the trades and the y max will be 0 because we don't want any water above 0. There we go. Let's try and see. So trades PnL is not defined. Yes, because it's not trades PnL, it's trades DF. And there we go. And just to make it a little bit nicer, maybe I will multiply this by 1.5 so that the water goes up until the end of the plot. But that's not doing what I wanted to do, so let me find a way. Let me find a way. Oh yeah, I see what's the problem. I see what's the problem. I need to set the limit of the plot. Set ylim equal to this so that we don't have this annoying white space right below there. Let's see if it works. Yes, now it looks good. What do you say, Mr. Amyuni?
I say it looks good. I like the PnL.
It looks good too.
It's a good PnL for sure.
So I think I'll stop here with this. I was planning to do another plot, but we ran a little bit over time. Tarek, I don't know if you have just a few more minutes to if our public wants to make some questions. If you can't, I'll just let you go.
Sure, we can answer questions if they have questions. The Python question will be for you.
Yes, of course.
I'll try answering the other questions, but yeah, for sure. So if the audience has any questions, more than happy to answer them.
So floor is open if anyone has any questions, and otherwise we will pause it here. All right, so I'm not seeing any questions coming.
So everything was clear. That means everything was clear.
Thank you. I like that version. So I will post the slides on LinkedIn, and yeah, please let me know how you found this session, because of course I will adjust it for the coming sessions. This was a first, so of course there is always room for improvement. Tarek, thank you so much. I was super honored that you came. This is a very lovely story. I was your student 10 years ago.
Yep.
And yeah, I owe you a lot. I think you found me 3 jobs so far. Probably more in the future. I don't know. But
thanks for sharing your knowledge with the students, and look forward to seeing you again in class next semester and next year. to
Thank
M1s
you
and
so
M2s
much.
and FMIs.
Beautiful. Thank you, Tarek. Thank
Thank
you,
you.
everyone, for participating. Please let me know how the session was for you and how you would improve it, and have a great rest of the day.